Hello, everyone, and welcome to the second episode of this investing series. If you didn't know, I'm basically documenting my investing journey where I invest around $500 each month into my tax-free savings account using Wealthsimple Trade. It is a commission-free broker that I personally use. If you guys want to sign up with them, link is down in the description. So basically today I'm showing you the investments I made during November. Some already talked about in the first video, and some were actually new ones. So obviously, like I said last time, since I'm still young and learning about the investing world in general, I just decided to add one more share of the S&P 500 index fund called VFV. Once again, an index fund is just this basket of stocks that allows you to be invested in multiple industries of the American economy. I also added 3 more shares of ATD, the retail company operating through different brands all over the world. Even though at that point my portfolio was already heavily weighted through this stock, I didn't really mind because I knew I would add more stocks along the way to balance a little bit more my portfolio. Okay, so technically by now you should be able to understand what an index fund is. And that leads me to the first addition to the portfolio this week, which was the index fund called ZCN. This is an index fund that tracks the TSX, which is the Canadian stock market. You will find a lot of ETFs out there that track the TSX, like XIU or VDY, but I basically chose this ETF for 3 reasons. The first reason is the low management fee. This is basically the fee that you're paying the investment manager to manage this index fund. Basically, the lower this fee is and the more money we get. So here's the comparison of 3 similar ETF with XIU and VDY on the right side and ZCN on the left side. They all track the TSX, and as you guys can see, ZCN has a lower management fee. On a $1,000 investment, they basically just take 60 cents every year, which is really low. The second important thing for this fund is that it's capped at 10%, which basically means that none of the stocks in this fund can weigh more than 10%. It is something that I liked because I knew after learning a bit, I would add eventually more individual stocks in my portfolio, and I did not want to be too much exposed in a single company. So you can see here a nice comparison with the Vanguard ETF that has, for example, 12% in TD. So if I were to own this bank individually at around 9% in my portfolio, that would actually add up. Not literally, but you get my point. The 10% maximum weight on this ETF allows me to avoid any big overlap that would make a position weigh much more than what I wanted. Last thing I want to mention for this ETF was the dividend yield. Thankfully, the Canadian stock market has a lot of great dividend paying stocks, so you'll be able to find some nice yields on these ETFs. Now, obviously, the yield on ZCN is inferior to the Vanguard high yield dividend ETF, but 2.86% is still pretty good to me, and when you add the 2 other reasons I just mentioned, I just feel like this ETF suits me best. Just want to mention real quickly that you will find the description down below and also right here the link to the playlist where I will put every episode of this investing series. Definitely like and subscribe to the channel, it really helps a lot. And yeah, let's get to the last investment of the video. The second addition I made to the portfolio was TD Bank. The Canadian company is centered a lot around financials and especially banks. You can find 4 different banks in the top 10 of Canadian companies. So I believe that holding some of them individually is definitely a good choice, or at least that's what I think. Plus, recently we had the news that Canadian banks were finally able to raise their dividends as their cash levels increased a lot during the pandemic. I will link this article down below, guys, if you want to take a look at it. So back to TD, it is currently the second biggest bank in Canada and second largest company as well by market cap. There are a lot of different reasons why I chose TD, but just know that there isn't any order to this list. First of all, their dividend history is phenomenal, and their current yield is sitting at 3.7%, which is pretty juicy. They haven't missed a single dividend payment in 164 years, which basically means that even during wars, they have paid their dividends to their shareholders. I also love that their business is heavily extended to the US. As you guys can see here, on Q1 of 2022, 25% of their earnings comes from the US. and they are actually right now the 8th biggest bank in total assets in the US, but they're growing even furthermore because they are apparently acquiring a bank which is called First Horizon, which is going to help them expand to the southeast. So in general, I think TD is definitely a great stock to own and is mainly part of my high yield dividend strategy because of their nice yield, but the growth and the consistency of this company is also really attractive to me. The last addition to the portfolio was the index fund called HXQ. This ETF tracks the American market index that focuses a lot on the tech sector. I want to have a lot of exposure in my portfolio in this sector, so that's why I bought this ETF. Again, I was just starting out, so ETFs were, in my opinion, the best way to start investing my money with a good diversification. The management fee of this ETF is not terrible actually. It's sitting right now at 0.28%. And when you take a look at their holdings, like I said, there is a huge dominance from tech stocks. But honestly, I was fine with that back then. Eventually, I did lower the percentage allocation of this ETF as I bought more individual stocks. But like I said at that time, ETFs were definitely the best way to go to start investing as quickly as possible. This is all for today, guys. Hope you enjoyed the content. Let me know in the comments down below what you think about these holdings and also if you own some of them. I'll definitely try to keep these videos coming at least every 2 weeks so you guys can catch up really quickly with my actual portfolio. So definitely subscribe so you don't miss on any of the videos that are coming. Take care, and I'll see you soon.